Welcome to Patched In, the PatchitUP podcast with Chad and Stacy, your inside track on franchise development, brand strategy, and building lasting value in the drywall business.
Welcome back, everyone. Really excited about today's topic. We're digging into PatchitUP.
Yeah, definitely. A brand lots of people are asking about, especially if you're looking at, smart investments in home services.
Exactly. We've gone through the materials, particularly the 2025 Franchise Disclosure Document, the FDD. So today, we're unpacking the numbers, the system, really seeing what makes this a compelling franchise opportunity.
And it's a good time to look at it. I mean, the home services market itself is really booming. Our info points to things like aging homes needing work, fewer skilled tradespeople around.
Right, and people wanting convenience, not DIY for everything.
Precisely.
Yeah.
So we'll look at how our model, the PatchitUP model, specifically targets those trends. We want to give you the core insights, basically.
Yep, our mission today is just that, pulling out the key stuff from the financials, from that FDD, which, if you're not familiar, is the big legal and financial blueprint for any franchise. Okay. So let's get into it. The heart of the business model. The FDD breaks down the service mix pretty clearly.
It does. It's quite specific.
Yeah, it shows 70% of revenue is coming from drywall repairs. That seems high, but they're high demand, right?
Well, absolutely. That's the core.
Okay.
Then you've got about 19% from new installs.
Okay.
And the remaining 11% from painting, color matching, that sort of thing.
So what's the thinking behind that specific blend, 70% drywall?
Well, it's strategic, that 70%. It taps into frequent, necessary repairs, things people can't easily put off or do themselves. It's less about, big discretionary projects and more about constant need.
So it keeps the trucks busy, keeps cash flow steady, that kind of thing.
Exactly. It's designed for that consistent demand. It's a proven system built for strong returns right from the start based on what we see in the FDD.
Okay, consistency is good, but let's talk money. The investment is under $155,000, the documents say. What kind of return potential are we actually looking at here?
Right. The FDD gives us some pretty interesting figures on that. It states the average monthly revenue per technician unit, so per truck and crew, is over $18,000.
Wow. Okay. Over 18 grand a month per truck.
Per truck, yeah. And when you look at how that happens, the average invoice is around $569.
That's a healthy invoice size.
It is. And they're doing roughly 20 to 35 jobs like that per month per technician unit. It points to efficiency,
Right.
Good scheduling, specialized skills, probably helping boost that average ticket price.
$18K a month per truck, driven by a high average invoice. Sounds great on paper. But keeping technicians consistently performing at that level, that can be tricky, right?
It definitely can be. That's a critical point for any service business.
So what do the FDD and our materials say about how we support that? How do we help ensure that consistency? And importantly, how does this scale beyond just one successful truck?
Good questions. The FDD details our comprehensive training. There's initial training, of course, but ongoing support too. Plus, we use proprietary software for scheduling, routing, designed to optimize things and reduce that variability you mentioned.
Okay, so systems are in place for consistency.
Right. And for scaling. The model is absolutely built for growth, not just single unit success. We see that clearly. We have multi-unit operators, owners with several trucks.
And how are they doing?
Well, the FDD shows combined annual revenues for multi-unit operators hitting figures like $702,110.03. It demonstrates the system is repeatable. You can add trucks, expand your area, using the same proven processes we provide.
So, summing this up for someone listening, what we're seeing from the FDD and supporting documents is a model that seems to provide, a clear financial runway.
Yes, and the support structure behind it. Operational simplicity, too, which is key for scaling.
Right. It looks like a way to generate, potentially strong margins in a market home services that's clearly in high demand. Seems like a solid roadmap.
That's a good way to put it.
So let's recap the key takeaways from this deep dive. We've looked at a business focused on high demand, high margin essential services, drywall repair being the big one.
Leveraging a system that's documented in the 2025 FDD.
Yeah, a system showing strong revenue potential over $18K a monthly per truck on average for both single and multi-unit owners. And all this comes with an initial investment under $155,000.
And thinking bigger picture, it connects to investing not just in a business, but maybe in a more future-proof model. It taps into those ongoing needs, aging homes, skilled labor shortages, needs that aren't likely to disappear. It feels designed for long-term growth.
Absolutely. So maybe a final thought for you listening. What could it mean for you personally to step into a market like this, where demand is pretty constant, and where, based on what we've seen, a detailed system for success is already laid out by us?
Yeah, what parts of having that structure, that documented potential, might really click with how you think about building a business? Something to consider.
Thanks for listening to Patched In. For more information about the Patch It Up franchise, go to PatchitUpFranchise.com.